Hello, everybody. So if you're enrolled in one of my accounting courses this spring 2022 semester, one of the things I'm more than likely going to have you do is to identify stock compensation expense. Part of the reason why I'm having you do this is that stock compensation expense, which generally does not involve any type of liability. Rather, it's something that's recorded by the companies because it's under generally accepted accounting principles. We've had to go through and do it since 2006. But really, what I'm looking to do for this group project is for you to identify the cumulative impact of stock compensation expense, not only on additional paid-in capital, but also on retained earnings. So the purpose of what I'm going to be doing here, and I'm going to be doing this for meta companies, also known as Facebook, is to give you an idea step by step in terms of how to go through and to do this. So let's go ahead and start us up right over here. So the way we're going to find stock compensation expense is generally going to be through the statement of cash flows. So for Facebook, let's first find out, when did Facebook go public? So Facebook went public on May 18th, 2012. So what we're going to go through and do is we're going to go through and try to go through and basically start at Facebook's inception, which we may need to go through and look at that on the form S1. So let's go ahead and get started. The first place we're going to go to is SEC.gov. When we go to SEC.gov, we're going to look up the company's filings. And I'm just going to try to turn off the investor toolkit. And what I may also want to go through and do is to look up just certain documents specifically. So just give me a moment. So what the SEC will do for you on some of their companies, they will have an investor toolkit. We're going to go ahead and turn that off. And when the other thing is too, is that when you're looking at the filings, what we're going to be more interested in is essentially are the annual and quarterly reports. So we're going to be looking at the annual and quarterly reports. And as we look at this, we need to go back in time. So we're going to kind of go over here and go back a long time. So as we go through and look at this, we're going to start looking at this starting over here. And let's go ahead and we can start with the most recent annual report, and we can work backwards. It's really up to you. So let's go ahead and go to the 10K for Facebook. When we go to the 10K for Meta Platforms, when you go to the table of contents, the first place, if you go through down here now, with the way a 10K is set up, is the financial statements are generally put in the back of a document, in the back of the document. When you'll see me in class, the reason why I will pull up the quarterly reports is because the financial information is generally shown at the very, very front. But when we're going through and dealing with the 10K, it's a little bit different. So for this form 10K for Meta Platforms, so we're going to go over here and we're going to go to item 8, which is they're basically their consolidated financial statements. So as we look at this over here for Meta Platforms, what we're going to go through and do is we're going to go over here and we're going to look at, we want to find the statement of cash flows, and I'll show you why in just a moment. So right over here in the statement of cash flows for Meta, you'll see that the share-based compensation was 9.1 billion in 2021, 6.5 billion in 2020, and 4.8 billion in 2019. Now, Facebook is a little bit unique because what Facebook has started to do is you can see these numbers that are being fully detailed out over here. So what we're going to do is we're going to go to our Google Sheet and we're going to say 2021. December 31st, 2021. If you're doing Microsoft, it might be September 30th, 2020. And we're just going to take this down over here. So for 2021, the amount of the stock compensation expense over here, this was 9.1 billion or 9164. Over here, this was 6536. And then over here, you've got 4836. Okay, now, what's also extremely important when you're going through and doing this is that in order to access this information more quickly in the future, we're going to be including a web link. Okay, so right over here, I'm going to copy this address right up here at the top, and I'm going to go ahead and just copy and paste this down over here. Okay, so Facebook has 3 years of different, basically of financial information. And we can also say amounts in millions. It might be important as we're getting into some of the earlier years. So this is going to be the web link. Now, when I come back over here to Facebook, and let's go. Okay, so we're just going to come back here. We just want to look at the annual and quarterly reports. And we want to look at this since 2010. Okay, so if I go to, so I just looked at this over here. Now, if I go to the following 10K, which was filed in 2021, I just looked at the one in 2022. But if I look at the one in 2021, what you're going to notice is if I come down over here to item 8, when I look at these numbers right over here, when I go to the cash flows, so right over here, share-based compensation, 6.5 billion, 4.8 billion, and then 4,152 million. Now, as you notice here, I already pulled these numbers here as the 6536, and then over here, the 4836. So what I can go ahead and do is I'll go ahead and just put in the one for 2018, which is going to be 4.315. I'm sorry, 4152. Okay, so this link over here for this one, I can just pull this up over here. So what I can do is when it comes to the 10Ks is I can actually come down here and skip down a little bit. So if I go to the one that was filed on January 1st, January 31st, 2019, when I come over here, what I should be able to see is when I go to the financial statements, when I come over here, I should be able to see the share-based compensation, 4152, 3723, and 3218. So when I look at this here, I already got the 4152. Let's go ahead and pull up the other ones. So we've got 3723. And then we also have over here, we have 3218. Okay. So what I also want to remind myself to go through and do is to pull up to make sure that I'm going through and doing this in terms of the referencing, right? I always want to make sure I have a web link to this because I'm going to have to go back, and as we do this project, I'm going to have to go back and obtain additional information from each of these documents. So let's now take a look over here. And let's go down to an earlier 10K. And let's go to, let's see over here what the amendment is. Okay. Okay. So what you'll sometimes see companies will do is that in order to get their filings done timely, what they may go through and do is they will file some of the information for the proxy statement or for the shareholder elections a little bit later. So what we need to do now is to find 2015. So let's go over here. And if we go to 2016, this should generally be the information that we're looking for. Maybe not the droids we're looking for, but certainly the information we're looking for. Okay, so we're now going to come down over here to our share-based compensation, and we still see this being broken out. And now we're getting a little bit of a better sense over here. So in 2015, this is going to be 2960. In 2014, this is going to be 1.786 billion. And then over here in 2013, this is going to be 906 million. So what I'm going to do after I go through and I've obtained that information, I'm going to come over here. I'm going to copy this down. Okay. We'll see how far we can go back. Just to kind of give you a little bit of an idea, Facebook did begin operations in 2004. However, they went public in 2012, but we may be able to get some additional information, and I'll show you how we'll do that momentarily. Okay, so now what we're doing is we're looking for 2012, 2011, and 2010. So let's go over here to 2013 and let's see what information we can find. So we come over here to this and we're still over here in millions, which is great. So we're now going to come over here to our share-based compensation. For 2012, this is going to be 1.5 billion. Or 1,572,000,000. In 2011, this is going to be 217. And then in 2010, this is going to be 20 million. And the last thing we're going to go ahead and do here is we're going to go through and we're going to total this up. Okay, so right over here, we're going to go ahead and pull our references. Okay, now Facebook has been around since 2004. So you might be asking yourself, okay, how can we get, other information? Because Facebook went public on May 18th, 2012. Once a company goes public, they're going to be required to go through and file 3 10Ks and 3 10Qs, quarterly reports, as well as a 10K. But what we want to do now is we want to see if we can find some other types of items that'll be something we can try to go through and find. What I'm going to be looking for is I want to see if I can find some registration statements. And this is usually going to be in the form of what we call an S1. Okay, so this is the 01, and I'm going to do a search on this to 2012 0101, and I'm going to look for everything. So let's see what happens when I look at this for Meta Platforms. Okay, so for Meta Platforms, I see right over here, and I'm not getting anything. So let's just hold on a moment, and maybe what we can do over here is let's 1231. Let's see what happens if we do that. Okay. And as I come down over here, we found the quarterly report. Over here, let's just kind of go down and keep on seeing what we can find. These are all the different items that they went through, the initial statements of beneficial ownership. And here we go. So this is what I was looking for when we were going through and doing this. So Facebook, they filed their Form S1, which is a statement to register their securities with the SEC. And this happened in February 1st, 2012. And let's go ahead and pull this one up and see what happens. So the registration statement is what companies use to register their shares. It has a lot more meat to it in terms of going through and basically information where we can kind of see, there's a lot more liability when it comes to when you file these registration statements, just because you're selling stock for the very first time. So, but let's go through if we can kind of see if we can find some financial information. So let's first try over here. It's selected consolidated financial data. However, I have a feeling though that that's not going to be what we want. Rather, in the registration statement, we want to go to the index of the consolidated financial statements. So what we want to look at here is we want to go through and try to find to see if we can find more information on past years. And so over here, I'm starting to see some familiar numbers, which is right over here. I see my share-based compensation at 217 million for 2011. And let's go ahead and take a look at what did we have on our financial statements. Well, we had the same thing, and we had 2010 at 20. And then over here, we're going to get one little additional year. And as we go and look at this additional year, we found for 2009, it was 27 million. Okay, so what I'm going to do here is I'm going to go ahead and copy this through. And that's where I'm going to find it. Now, could I go back any further in time? And the answer is probably not. There might be a way for me to kind of go through here and look. If I look at some of the share-based compensation right over here, that's giving me about 18 million. Well, actually, we actually can. Let's take a look here. So 2008. So my share-based compensation for 2008. No, that's really like my beginning balance. So there's not really a lot I can go through and do. So that's going to be the first part of the project. And so all we've really kind of done over here is we've gone through and we've identified the stock compensation expense. Now, what the other thing we're going to want to do is we're going to want to go through and total this up. And just so you can kind of get an idea in terms of where I'm trying to go with this. When a company issues stock options, here's what happens is that I'm going to debit stock compensation expense, and I'm going to credit additional paid-in capital common stock. So collectively for Facebook, they have had 39 billion of stock issuances. Now, why is this of such interest to me as your instructor? Well, the reason why this is of such interest is because as an investor, and this is really where the heart of this discussion is, as an investor, when I, as an investor, am looking at additional paid-in capital, when a stock is going through and being issued, so if shares are issued for cash, what I will typically do is I'm going to debit cash. I'm going to credit common stock at par, credit additional paid-in capital common stock. And as an investor, when you look at Facebook for, as of right over here, so when we look at Meta Platforms and we see that their additional paid-in capital is, as of December 31st, 2021, is 55,811,000,000. Okay, so this is their as of 12/31/21, and their retained earnings is going to be as of 12/31/21 is going to be 69,761,000,000. Now, if the stock compensation expense was never recognized, what would you see happen? Okay, well, the first thing is that with stock compensation expense, if we remove it, basically when this is debited, this is going to reduce retained earnings. So if I reversed that, my retained earnings would be increasing by 39,117,000,000, but at the same time, my additional paid-in capital would be decreasing by $39 billion. So when we look at this, we end up at the same dollar amount. However, if we have no stock compensation expense, it kind of paints a little bit of a different picture. Facebook all of a sudden now has $108 billion worth of retained earnings, and they have additional paid-in capital of 16.6 billion. But as we know, how much did Facebook raise on their IPO? Well, Facebook raised about 16 billion. So when I'm looking at this, this is actually this looks actually like pretty close to what Facebook actually raised. That extra $694 million is probably potentially employees that paid cash to exercise their stock options. A lot of times employees will use a cashless exercise. But again, this is going to be the first part of what you're doing for your group project. You're going to go through the company that I have assigned to you. You're going to essentially create the web links for these companies, or excuse me, you're going to find out how much stock compensation expense has been recorded. You're going to give me a web link so that I can go through and follow up to that, and you can total the amount. But this is going to give us a really good starting point in terms of going through and looking for our companies. So for whatever company that I have given you, by the way, if you're doing Microsoft, so if I look over here for Microsoft, if I look at Microsoft and I look at their reporting, what you'll notice is that their annual report, and I may even have this wrong. So if I come over here to look at their financial statements, their year end is actually June 30th. And Microsoft has been around for a very long time. I have a feeling at some point in time, Microsoft's year end may have been September 30th, but if it's June 30th, it's okay. So what you're going to do if you don't have that data, right? So for a company like Microsoft, the difference here is you'd be using year ended June 30th. And then what I'll help you do is we'll get the most recent information by looking at some of their quarterly reports for their more recent periods. So, but in any event, I want to thank you for watching this here today. I promise to make this ad free, so you don't have to worry about seeing those ads and me trying to monetize my YouTube channel. This is not something I would do that for. But in any event, I look forward to seeing you on the next video. Have a great rest of your day.